Thank you for being with us this afternoon. Today's shipping industry is faced with a rapidly changing environment caused primarily by increasingly impactful regulations on the environmental, financing, as well as operational side of things. Although the long-term objectives of such regulations is to increase transparency, decrease harmful emissions, and in overall enhance efficiency in the sector, short-term effects include higher operating as well as financing costs, as well as potential bottlenecks in shipyards for new building orders. In these adverse conditions, ship owners are called upon to plan and execute their strategies in order to capture potential opportunities and mitigate foreseeable risks. Today, we are delighted to have with us the representatives of two distinct Greek ship-owning companies who will share with us their strategies. Without further ado, let me introduce our guests. Today we have with us Mr. Kosmatos, who is the Business Development Officer at Tsakos Energy Navigation, and Alexis Stephanou, who is the Chief Financial Officer at Goldenport Group. How are you, gentlemen? Welcome. Delighted to have you with us today. So, to start from the public side, Harry, as a representative of a large Greek publicly listed shipping company, what is your outlook on the sectors that TEN is engaged in, and subsequently, what are your strategies going forward? Mm-hmm. Mm-hmm.
we position the company to tap the market. On the new building front, as you know, the company has been very active. Actually, the fleet that TEN has today almost exclusively has been built for our own account. We haven't really bought vessels in the second-hand market. We are looking forward to, once an opportunity arises, to build vessels against long-term contracts. We will not build on speculation. We have adopted a more industrialized approach when it comes to time charter, to our time charter policy. So we are always seeking to do transactions with the blue chip oil majors for the longer run, like for 5+ years, to the extent that they're there. Today, we don't see such lengthy time charters being available. But we believe once the charters see what we see, and I'm sure they see it before we do, they will start offering longer-term contracts before the market really takes over. So overall, we feel we are in a good position. And besides our bread and butter, which is crude tankers and primarily crude and a component of product tankers, we would like to expand or deepen our footprint, if you like, in the more specialized sectors, which in a way differentiates TEN from the peer group, and that is LNG and shuttle tankers. We are, as we speak, have one new building on each of these categories that we will take delivery by the end of the year, early next year. Looking ahead, we would like to use some of the cash that the company will be generating to invest in those parallel sectors and hopefully expand from there and as I say, deepen our footprint. And we will never become a shuttle tanker company or an LNG company exclusively, but we feel at some point, and assuming we get an accretive employment and competitive financing, we would like to probably double our presence in those specific sectors.
Okay, thank you, Harry, for the very elaborative presentation. So during your talk, you mentioned the industrialization of the tanker segment, as I understand. And given the fact that you're a publicly listed company, which thus gives you the ability to access a wider variety of financing sources, do you think, first of all, first question is basically, do you think the industrialization of the sector will continue in the future and will become more and more important? And if that is so, then how do you intend, or do you intend to change the way you finance your projects? So do you intend to use more public market instruments, or how do you see that evolving from your side?
It depends on how you want to grow and the areas you want to tap. I think that if you're looking for public funding in one way or another, through the common stock, more structured deals, joint ventures, and everything in between, with private equity investors and the like, then a company would probably need to shift towards the industrial side of the business, because in the nature of these investors, they are not taking the equity risk. They are not taking the market risk, if you like. So they would rather sacrifice some of the upside or the volatility in the market and safeguard and secure an annuity-like return in the high single digits, low double digit kind of area, and make sure that come through through thick and thin, they will get that return. Unfortunately, we don't see too much appetite from the retail sector and other investors to invest directly either on the asset or the common equity of the company. Again, for the exact same reason that they've been there, done that. A few of them have burned their fingers, so they would rather go into a more secured project. That's why we have seen over the last few months more credit-oriented funds investing into shipping rather common stock holders, retail holders that play the volatility in the market.
Understood.
It's
Thank you,
more
Harry.
short-term approach.
Thank you, thank you. So, Alexis, as the CFO of Goldenport, you're in the unique position to have a view on all three main segments of shipping. So, the dry bulk market, tankers, as well as container ships. So, given your unique position and the fact that you're still a private Greek shipping company, what is your view or your outlook on those three segments, and how do you intend to change your strategy if you intend to do so? Or otherwise, what is your strategy going forward?
Well, many thanks, Konstantinos, and to Despina for the invitation to join this panel. As you are aware, Goldenport Group controls a diversified fleet, comprises about 40 vessels, comprising dry bulk carriers, container ships, and tankers. So we believe that diversification is a key pillar of our strategy, and it is a critical success factor to survive and prosper in what is a cyclical, highly cyclical shipping sector, in which the different segments seldom move in the same direction. So just to give an example, back in 2016, when the dry bulk market hit an all-time low, the tanker market was healthy. And then last year, when COVID struck, container ships and dry bulk carriers took a hit, but tankers were experiencing sky-high rates as a result of the demand for floating storage that was triggered by the collapse in the oil price. Now, as Harry's also mentioned, tankers have been weak recently, obviously the unwinding of the floating storage and the inventory destocking. But container ships and dry bulk carriers, on the other hand, have exhibited very strong performance. So there is this element of diversification that we believe is beneficial to the performance of our group. And it does give us insight into the relative merits of investing in those different segments. When one segment is strong and another is weak, we can reallocate capital from the former to the latter and take advantage basically of acquisition opportunities. Now, looking ahead, we do believe that dry bulk carriers have at least 2-3 years of positive outlook, underpinned by the global infrastructure spending and the limited order book. Container ships that have been the star performers over the last few months, they're bound to revert to lower but still healthy levels as vaccinations increase, our life returns to a certain normality, and the consumers shift their spending from goods back to experiences, travel, and so on. And tankers we expect to gradually revert to normal market conditions as the inventory destocking cycle ends and COVID recedes. We expect an explosion in demand for travel. So towards the end of the year, we expect that all three segments in which we are active in could be generating pretty attractive cash flows. So diversification, we feel, is an important pillar of our strategy. Perhaps if I touch on another one, which is in a way similar to what TEN is doing, is partnerships with cargo interests. We also like those because they de-risk our investments and they allow us to generate economies of scale. So these partnerships may involve a long-term charter and be of more of a trading nature, or they may also involve an equity investment. Potentially, they could also involve contracting new building vessels that would be in compliance with upcoming regulations, but always for a specific cargo need. Now, just to touch, to mention that there is an emerging threat to this sort of type of strategy, which is that we have been seeing charters securing also operating leases from a leasing house, and then they outsource basically the technical management to a third party, and in a way, cut out the ship owners. But we do believe that nurturing long-standing relationships with charterers and contributing capital to joint ventures, and therefore having skin in the game, I think that offers better alignment of interests with our customers.
Thank you, Alexis. Very interesting from the side of Goldenport. Now, for the second part of our discussion, I would like us to shift focus on a more macro view and speak a bit more generally about the Greek shipping industry. So the main thing I would like us to discuss, and for you to express your opinion, if possible, is how do you see Greek shipping specifically changing in the future? What I mean by that is essentially that the profile of the average Greek ship owner is that of a smaller shipping company, below 10 vessels probably, which of course doesn't allow for large economies of scale. And also during the last 5 to 10 years, we see increasing financing costs for such companies. So from your point of view, how do you see the profile of the Greek ship owner changing? And do you think it will affect the power of Greek ship owners globally overall? Whoever you would like to start. Harry, if you want to go first, since you were the first one in the last question.
Well, Greek shipping was and will remain, I think, the most dominant force in the maritime industry. Irrespective of regulations, irrespective of ever-changing, technical issues, the Greeks have proved that they can always adapt to a certain degree or another, but they can adapt. Today, as we speak, I think there are more than 800, 900 shipping companies in Greece. The majority of them small, family-owned, 1, 2, 5 vessels, under 10 vessels, kind of companies, which, some of them have very low debt, older vessels that have probably repaid their loans. I think that for the foreseeable future, they will continue operating. They will not necessarily compete for the Exxon contracts or the Equinor contracts, but they will always be out there in the spot market doing their trades. And eventually, the companies that have aspirations to do something bigger, to grow and to grow big and to go into different areas than their kind of comfort zone, then they will have to adapt and they will have to adopt new measures and new ways in handling the financing aspect of the operation. They might need to go out and seek private equity money, do joint ventures, which by default will require them to change, if you like, the way they've been used to in operating the vessels. As I have said frequently, you will only do that because you have a strategic idea, a strategic plan in how to grow your business, and you want to go from point A to point B through a measured way. You're not doing it because it's fashionable. You shouldn't be doing it because you want to go to New York and raise money and brag to your peers that you're a public company. Because the moment you fall into that trap, the company's going to go bankrupt. So it's very important to be very specific on your growth plans. And I think we have, other than the big Greek shipping companies, there is a good number of medium-sized companies out there ready to go into the next level. And I think over the years, these companies will kind of accelerate their development. But all in all, I think in terms of numbers, in terms of volume, Greek shipping will remain a dominant power. And as Axel very poignantly said in the interview before us, even with one vessel, you can have a very decent life. So not every ship owner has the same ambitions. For the majority of ship owners, 1, 2, 3 vessels would be more than enough. And this is how it will remain. And I don't think shipping with the new technology and propulsion issues and aspects that everyone is talking about, be it LNG powered, hydrogen powered, and what else in between. It will not happen overnight. So over the next, I think, 10 years, 15 years, I don't see any spectacular changes, just fine-tunings, but perhaps more dominant in the mid-sized companies that they want to go elsewhere. They want to go one level up from where they are.
Okay,
so
thank you, Harry.
To adapt
So
No, no,
thank you. Thank you very much. So Alexis, from your perspective, do you have more or less the same view? So do you see, as I understand that Harry does, the Greek ship owner retaining its strength basically through those adverse conditions that we're living in right now, and even becoming stronger in the future?
Well, it is certainly the case that Greek shipping is made up of small family-owned companies that are predominantly active in the dry bulk sector, and the operating environment is becoming increasingly challenging. So shipping generally is a textbook example of perfect competition industry, where abnormal profits do not exist, and only the fittest can survive in the long run. So there seems to be a bias for those that are able to deliver on a low-cost basis and maintain quality, and size often helps in that respect. Financing conditions, you're right, are becoming more onerous. Also, we have the cost of the regulatory compliance. I think I have referred to that as well. That is increasing, and larger companies tend to have the benefit of economies of scale, and they can also pursue some of the strategies that we referred to before, like diversification and partnerships with cargo interests. But these tools are often not available to the smaller companies. And just to link to Harris's comment about, and Axel as well, on consolidation, it is also hard to implement because principals tend to prefer to be captains of their own ship, as to use the industry analogy. So perhaps an alternative option for smaller companies that could achieve some of the benefits of consolidation would be to outsource certain functions. We have also discussed this, Konstantinos, at some point in the past. So perhaps this way smaller companies could benefit from technological advances and achieve lower operating costs, thereby remaining competitive versus the larger peers. However, even such a shift would basically require a change from the current mantra, which is that generally we like to do everything in-house. Mm-hmm. So that is there is a change in culture that would be involved in making this type of move.
Okay, thank you, Alexis. Thank you both, gentlemen. Great to have two representatives of such large Greek shipping corporations have such a positive outlook on the future of shipping. At this point, I would like to thank all our guests which are attending this afternoon. And again, thank our two guests, Harry and Alexis. Thank you all for being here, and look forward to continuing our interesting discussion next year. Thank you.